All right, my lovely friends. It is me, Gregory Mannarino, and this is Sunday, November 15, 2020, my newest segment of Markets, A Look Ahead. We're going to talk about a few things here and gain a perspective on how we are going to stay ahead of this thing that we are involved in. And it is a thing, really is. Where to start? How about this? Right now, literally right now, as I am doing this video blog, we are in the middle of witnessing central banks around the world about to issue more debt than you can possibly imagine. Again, why? We're in a global economic meltdown. And despite this, stock markets, especially here in the United States, we just hit another record high, continue higher. Does it make any sense to you? It's an incredible phenomenon that we are seeing here. A dead economy. How can we prove the dead economy? You know what I'm going to say if you follow my work. Right now, again, today, the rate at which cash is moving through our economy is at a new all-time record low. If cash is not moving through the economy is dead. As a matter of fact, the money velocity, the rate at which cash is moving through our economy, has been at a historic low or close to it since 2008. So since 2008, we have not had an economic recovery. We have not had an economic boom. All they have done is vastly expand the debt. And as I've been explaining to you since literally time immemorial now, debt is the only mechanism that is keeping the stock market afloat. Government bailouts, the Federal Reserve buying corporate debt is creating zombie companies, zombie corporations. It's a zombie economy in many, many ways. It's dead. But the stock market continues to rise. Now, understanding the mechanism here just makes our life easy. And that's what this is about, making our life as easy as possible so we can navigate through this thing that we are all in. So if we understand that central banks around the world are doing the same things at the same time, they've been doing this forever, but it's about to get pretty epic. Now, right now. Number one, we need to understand that we are in a bubble with regard to the debt market. It's the monster of all monster debt bubbles. There's been nothing like it in the history of the world. You need to continue to bet against that, which means what? You know, if you follow this blog, hold physical gold. More importantly, in my view, physical silver, the most undervalued asset on the planet, bar none, period, the end. You also need to be in cryptocurrencies. I know, and people keep writing to me, Greg, is it too late to get into Bitcoin? Is it too late to get into cryptocurrencies? My answer, my opinion is absolutely not. I don't think we've seen anything yet with regard to the moves, with regard to cryptocurrencies. In relation to the epic amount of debt acquisition which we are about to see. Again, I said this the other day. I forgot what day. Maybe it was Friday or Thursday. In March, the Federal Reserve's balance sheet stood at $4.1 trillion. Today, it's over $7.1 trillion. And we haven't seen anything yet. This is nothing. It's going up. I think it was Friday when I said it. 100% from here. 100%. So 7.1 trillion plus is going to be 14.2 trillion plus in short order. In short order. The Federal Reserve's balance sheet today is larger than most countries on earth. I want you to think about that. It's a pretty epic thing just to ponder. But understanding this makes our life easy yet again. Let them play their games. We are going to play ours. Now, with regard to the stock market here, we have three keys, that we need to pay attention to. Let's cover them. Number one. You know what number one is, I think, if you follow this blog. The debt market. The 10-year yield is the only one you have to watch, okay? Forget about the rest of the yield curve. Watch the 10-year yield because it's the benchmark. Follow its moves up and down, and you will have a very good idea as to what the stock market is going to do. Okay, again, it doesn't move in lockstep. We have to look at a couple of other things, 2 more keys. Pay attention here. But understanding how the 10-year yield works gives you a massive, massive edge on this market. For example, if the debt market is fearful that something is going to happen, well, what will happen? You're going to see the 10-year yield drop. That means that cash is making its way into the debt market. Where's it coming from? Generally from the stock market. Stocks will fall. If there is a sigh of relief or the market is thinking that stocks are going to rise, you're going to see the 10-year yield go up. Cash is leaving the debt market, just waiting for somewhere to go. And generally it will go into the stock market. It's a very simple mechanism now. Number 2. So that's number 1. Number 2, the dollar. Keep your eye on the dollar, or the DXY. Now, I have all of these charts and stuff for you to look at on my website, traderschoice.net. Just click on this link. You can watch the dollar index. There's a link to the 10-year yield. There's all kinds of charts there for you, free downloads, everything else you can think about. A lovely chat room. And for my moderators out here in my chat room, my hat goes off to you. You're doing a great job. All right, so I explained to you the importance of the 10-year yield, especially, well, hold that thought, and the dollar. Generally, when there's fear in the market, you get a knee-jerk reaction into the dollar gains strength. That's not good for the stock market, you understand? Stronger dollar is also negative for precious metals here. But we understand the rigging in the metals market. It's off the Richter scale. JP Morgan, public enemy number 1 with regard to rigging the metals market. So, number 1, we got the debt market to look at. Number 2, we have the dollar, or the Dixie, to look at. Number 3 is crude oil. What is crude oil doing? Crude oil, again, I'm going to say this for the gazillion time, is the lifeblood of the military-industrial complex. It is the lifeblood of the market in many ways. The investment banks have massive leveraged bets with regard to crude oil. When crude oil gets propped up like it is now, I mean, the price of crude oil, what, like $42 a barrel? Has no business being here. Should be about $13 or $14 a barrel in this environment. But it's propped up. It's fake. So with that, you get a boost to the energy sector and a boost to the financial sector. Boosting these 2 sectors of the market tends to push the whole market up. You understand? Now, let's talk about tech real quick. I've covered this. The tech sector is a big part of this market. Now, we watched the tech sector recently fall into some pressure. It's made a pretty astonishing rebound here. Tech is also going to drive the market higher. So I guess you can consider this number 4. Okay? So you want to watch for 10-year yield, what's it doing? Dollar, what's it doing? Crude oil, what's it doing? Man, I'm getting bent out of shape here. Number 1, follow me on this one, okay? I'm tired, like I said in the beginning. 10-year yield, U.S. dollar, okay? Very, very important. Crude oil, did I say that? And of course, the tech sector. Very, very important to keep these things in mind when you're trying to understand the markets, okay? Technical analysis is great, okay? And I just put out not 1, but 2 brand new trading systems, 100% free, the charts, how to set them up in my free newsletter. There is a link in the description of this video. I know a lot of you guys are already starting to use it. I've gotten a lot of emails about it. Technical analysis is important, no doubt about it, but it's one part of the puzzle here. You got to pay attention to these other things that are going on. You got to pay attention to everything that's going on. It's not an easy task, but that's how we stay ahead of the market. This is how we beat the market. This is how you become a lion. You understand? I don't know another way to put this, people, but if you have an understanding of the environment we are in, the fact that we are in an economic meltdown right here in the United States today as we are speaking, and it's going to get worse. It's going to get worse before it gets better, but that does not mean the stock market is not going to go higher. People have been kind of lulled into the belief that the stock market is the economy. They're completely disconnected. What's happening in the stock market has no bearing whatsoever as to what's happening in the economy. Politicians point to the stock market to say, hey, look at the stock market, it's going higher. It means our economy is doing great. It means we're adding jobs. Nothing could be further from the truth. But again, it's a distraction. It's propaganda. It's how they twist your mind into believing things that are just absolutely not true. And I think you already understand that. So for this week here, I know this is Marcus A Look Ahead. It looks to me like the setup is the stock market is going to hit a new record high this week. I'm not saying we're not going to get some, moving around in the markets. That's what they do. It's a random walk with an upward drift in this environment. But with the promise of more debt on an unprecedented, epic scale, the Fed's balance sheet ballooning from here, where do you expect stocks are going to go? You think we're going to get a big crash like tomorrow or the next day? I know there's a lot of YouTube channels pushing that narrative. It's completely fake. They have no idea what they're talking about. They're not market people. And I think they should keep their noses out of the market because they don't know what they're talking about. I've been keeping all of you on the right side of this market for years, telling you to get long, get long, get long. In other words, stay in the market. And I can only imagine the amount of wealth I've created for people by keeping them on the right side of this market, by getting them to get into cryptocurrencies, buying Bitcoin at 2,700. Now it's over 16,000. By putting people in the right spot with regard to precious metals here, which are going to balloon higher exponentially at one particular time. Again, this is not going to go on forever. This is not going to go on forever. But for now, this is an opportunity for all of us. In every aspect of this market is an opportunity for us. Cryptocurrencies, trading the market, obviously. Let them play their games with precious metals. We will play ours. Let them suppress it from here until whenever they got to do it, because this whole thing that we are in is going to correct the fair value at one point, and it's going to be monumental. And it's a setup. It's a setup as well, again, to drop the final hammer on multitudes of people. And I'm going to keep you on the right side of that too. There's no doubt about it. I promise you I will do that. I think I have kept true to my promise for all of you for a very, very long time. All right, look, with that said, this guy loves you a lot. I hope I have shed a little light on the current situation. Please share the video. I could always use a thumbs up. Makes me feel good. And I'll see you in the morning, and I'm looking forward to it.